Hey, everybody, it's Thursday. And you know what that means? That's right, it's another edition of the Real Deal Pod with Allister and Geoff, the podcast that is continuing to shape and inform both the mortgage and real estate industry. Yes, I am Allister Carrington, your trusted realtor. And as always, alongside with me is our main man, Geoff Lee, our trusted mortgage broker. Woo! It's US Thanksgiving for our US listeners. I hope you guys are enjoying your turkey dinner and enjoying the football games going on right now. Geoff, buddy, how you doing?
Yeah, I'm doing good. Doing good. I thought I was going skiing yesterday, but unfortunately my ski partner pulled his back and
Oh,
ended up staying in the city.
oh no. Was it good? Like, was it supposed to be, was there a good snowfall up there?
No, I don't think so. Whistler just opened up yesterday, so there was limited runs. Um, yeah, it was probably a day to be missed, but I was kind of looking forward to it. But in the same respect, I was also happy that I didn't burn a pass.
I guess so. So you bought your usual Whistler pass that you always get?
Yeah, I have a 5-day pass to Whistler, which is seems to be perfect. And then in the past, I've always been 4 times. I've never used it all 5 times. So yeah, this is the year I'm gonna use it
Good
all
work, buddy.
5 times.
Good work. I heard you talking before about Squamish. How's that one?
Squamish, as far as the mountain,
Yeah.
well, there is no ski mountain on Squamish.
Oh, I thought you said there was. Oh no, Sasquatch. My bad. Sasquatch Mountain. That's what I meant.
Yes, Sasquatch used to be called Hemlock.
Right.
And yeah, it's a small little mountain, but if you really know it, there's the baby bowls, and then you can kind of hike up onto a ridge and go and pop into the ridge line. It once you know that mountain, it's actually really good. If you're just to ski the groomers and stuff like that, it's pretty average.
Okay. That shows you how much I know about skiing, Geoff. There's not a lot of black skiers out there. Like the Jamaican bobsled team being like a once in a million thing. That's a real thing. We don't, black people, we don't like cold.
Well, they used to say that about hockey, but there's lots of black people playing hockey now.
Well, that's relative compared to the amount that there used to be. When you go from like one to two to now to like 10, that's a pretty big increase, but it's still only 10.
Well, if we were to pitch it like how our government pitches things, it's 160% increase.
Right? Nice. Well, man, buddy, it is almost Christmas time. We are less than a month away. You said you're all done your Christmas shopping. Congratulations.
Yeah, thank you.
Yeah, I'm one present closer to being done. My wife told me one of the things that she wants, so I went and picked that up. So now she's only got to tell me the other things, and I can finish it off. Yes, she tells me what she wants, and then I buy it. But that way, I can get away with having to return things, or she can get away without having to return things, and she gets everything she wants. So I figure it's a win-win for everybody.
I'm really good at when I'm doing things like I'll notice what people like, and I'll just buy it regardless of the season, right? So I'll either do it as a birthday gift, or I'll do it as a Christmas gift, or sometimes I'll just do it hey, I think you're an awesome gift. So
Well, that's
yeah.
nice, Geoff. I'm going to make sure that you and Michelle don't talk often so that she can't say, look at what Geoff does and look at what you don't.
Well, that's one quality that I'm good for, but there's many that I'm not. So
Geoff, I love you just the same, so it's all right. I take you just how you are, my man.
perfect. I'll take it.
Awesome. Well, buddy, we got a lot of things to get in today, so let's kick it and let's get started with podcast's hottest segment, and that is
Did
you know?
you
That's
know?
right, baby. Did you know? Did you know, Geoff, that Canada is about to see one of the biggest shakeups in interprovincial trade in our country's history?
Someone told me that they actually released or there's no tariffs, interprovincial tariffs anymore. Is this where we're
So
going?
that is where I'm headed, buddy. It's not the tariffs. Well, it's just the approvals and then the cost of stuff. So we talked about it quite a few pods ago, how that was something that they were working on and needed to be done. And finally, all provinces, territories, and federal government have officially signed a new agreement that reduces the red tape that's been slowing businesses down for decades. This deal, called the Canadian Mutual Recognition Agreement, basically says this: if a product is legal to sell in one province or territory, it can be sold in another without extra rules, approvals, or paperwork. So it's a simple idea with a massive impact. Beginning next month, tens of thousands of goods will be able to move freely right across the country. The only exceptions for now are food, beverages, plants, tobacco, and animals. But BC is pushing to get those included as well. According to BC's Minister of Jobs and Economic Growth, Ravi Kahlon, this is the largest red tape reduction in Canadian history. And as someone who works closely with businesses, consumers, and the economic forces behind our local real estate markets, this is a big deal. So here's why it's going to matter to everyday Canadians: more competition, more choice, more consistency, and better pricing. Because when companies don't need to navigate 14 sets of rules, right, consumers win. And this is why it's going to matter to businesses. They can expand nationally, skip duplicated testing, certification and paperwork, and scale faster. The Greater Vancouver Board of Trade even highlighted that internal trade barriers have been costing Canada tens of billions every year. And here's the wildest part: economic modeling suggests this agreement could add up to 7.9% to Canada's GDP, potentially unlocking $200 billion annually. So that's not pocket change, man. That's transformational economic potential. So from my perspective, this is one of the moments where you can see the long-term benefit, even if the immediate impact feels a little bit abstract. When businesses grow, communities grow. When consumers save money, households strengthen. And when Canada reduces friction between its own provinces, we become more resilient, especially when our largest trading partner, aka the United States, is unpredictable. I also appreciate that the government still protects each province's ability, to regulate for health, safety, and the environment. Removing barriers shouldn't mean lowering standards, and this framework seems to respect that balance. My hope, though, is cautious but optimistic. I'm hoping that we'll eventually see food services, and even alcohol become part of this mutual recognition. That's when we'll really feel the everyday impact of a modernized internal marketplace. So that brings me to you, Geoff. What are your thoughts?
Well, you know what? There's a lot there, a lot to unpack. I was actually going to come back to you and explain this to me as a grade 5 because there's so much information in there. My brain started to swell a little bit and I was blocked out.
So what part do you want to dumb down a little?
In simple language, what does this mean?
So what this means is all of the red tape that has been costing provinces in terms of having when let's say BC has a product and Alberta wants to sell it. Well, now Alberta has had to go through, they've had to make sure that they've tested it. Let me get back to what here it is. They've had to test what's already been tested. They've had to go through and recertify. Extra paperwork, of course, right? So extra paperwork is extra red tape, right? And even in labor, right? It's even costed an extra, well, and that's costing an extra labor. So what it's doing, it's reducing all of those costs. So it only has to be done once. So once it's been done in BC, right, it can be now rolled out all the way through to the Maritimes without having to go through that red tape 14 different times.
Right. 14 because of the provinces throughout.
Right, because of provinces and territories, and because each province would have to do it if they wanted that product sold in their province.
So it streamlines everything, cuts out the red tape, and re-injects money back into what we
Back
normally
into,
would be having to spend.
right, back into Canada,
And
right? And
north
that's
of
why it's
$200
good.
billion.
North of $200 billion annually.
Yeah. So my simple mind says this is that interprovincial trade is going to become better for every province
Yep,
because wherever these goods are coming from, they're going to be vetted once and they're not going to have to be vetted over and over and over again, depending on the province is that they go into. And that cuts out all the red tape. And in doing so, saves the country, the provinces, billions and billions and
of dollars.
billions of dollars that they could
Yeah,
possibly
and this is why they
reinject
were
back
saying,
into their province.
exactly. And this is why they were saying before that it was literally cheaper to export our goods out to the United States, right? Rather than sell them in our own province. Because the more times you did it, the more expensive you made it,
Yeah.
right? So the more provinces that it hit, the more expensive that that product became. So now again, with our trade, right, being a little bit unpredictable right now, it's opening up more reliance on our own interprovincial trade,
Is
right?
this
We
why
become
alcohol
more dependent on ourselves.
is this why alcohol is so expensive because it's so taxed heavily and fuel?
Yeah, yeah. And so the alcohol hasn't been added to this yet, but that is one of the ones that they're hoping
And how
will
about
be.
gas, fuel, petroleum?
No, that one's not on there yet as well.
Hmm. Yeah.
Yeah, that's a tough one with the fuel companies, but they did. This one isn't part of the did you know? I do know that Carney's new economic bill is actually supposed to be opening up pipelines between BC, Alberta, and the rest of the country. So that should actually make our fuel a little bit cheaper. I just haven't drilled down into what that looks like yet.
Yeah, I was talking to somebody about that, and he kind of mentions like this is a $1 billion thing, this pipeline, and you're not really hearing much about it, right? Here in BC.
Yeah.
In fact, I think our BC Premier Ebby was like, "This is news to me," right? And I'm like, how can a pipeline running through our province be news to you?
So my argument for that is that they don't want to alert the activists because it's the activists that have been the ones that have shut down prior pipeline discussions and pipeline builds, right? If we think back to the one that Alberta was trying to do before the Keystone, right? The Keystone pipeline, the activists kind of shut that down with their voices and their antics. So I think what they're trying to do is quietly get this done because in all reality, this is what we need, right? This is what we need, and the technology is there to protect against spills and all of the other things that the activists want to claim that will happen, right? We are much better in the way things are built. So, yeah, I won't get on that one because I don't want to make any activists that are listeners. I don't want to make them upset with me.
So you know what? These is good things that our country is going through, which is great.
Yeah.
And when I hear about a lot of these goods going interprovincially and not having to go through all the red tape, and as a result, saving, millions to billions of dollars, hopefully that's going to be re-injected back into the province.
Yep.
When I hear for BC that this pipeline is coming, that again is encouraging because again, it's all about that cost of living, right?
Right.
So it looks like our government, as of today, has done or is doing a couple good things that we can actually talk about. So
Yeah, I think we're on a pretty good path right now. Again, we'll see how that path goes, but I think the framework is there. to put us on a pretty good path. Because again, at the end of the day, what this all drives is better pricing for everybody, and it comes back to affordability.
Yeah,
So,
good.
yeah.
Good,
Well,
good.
man, yeah, I think
Oh,
so.
mine's
So
not
one of
as
the
exciting. Mine's not as
Oh
exciting. Oh yeah,
wait,
sorry. You're not done yet.
I wanted to talk about my insights with Allister because Geoff, it is actually something that I know I sent out to you last week because you're part of my customer database.
Mhm.
Um, but I got a lot of feedback from my clients when I brought this to their attention. So I thought it would be something important for our pod listeners to hear about. And so today, I wanted to end the insights with Allister. I wanted to take a look at a story that's been circulating across the Lower Mainland, one that carries important lessons for anyone considering a pre-sale and for the realtors guiding them. So, earlier this year, Belvedere Tower in Surrey made headlines with its heavily promoted condo day flash
Yeah,
sale.
yeah,
For one day only, Square 9 Developments offered units at 25% off. It was marketed as an opportunity, fast moving, high energy, and designed to generate buzz. But I wanted to just pause there because when you see discounts that deep on a newly completed concrete high rise, it's rarely a sign of strength. And now we know why it happened. Belvedere was originally reported sold out in March 2025. But as the condo market softened and more buyers failed to complete, the developer found itself with 40 unsold units at the point of closing. That missing revenue created immediate pressure. Lenders needed to be paid, timelines were tightening, and carrying costs were accumulating. The 25% flash sale wasn't about offering a great deal. It was an attempt to inject quick cash into a project under financial strain.
yeah,
And in this industry, that kind of fire sale pricing is a loud signal, as I said, that something isn't aligning behind the scenes. So for buyers and the realtors advising them, that's when the warning bells should ring. Deep discounts on a completed tower often indicate mounting cash flow pressure, issues with buyer completions, signs the lender is getting anxious, and the possibility that the project is headed towards restructuring. So, shortly after the flash sale, that concern became a reality. Square 9 sought creditor protection with secured and unsecured creditors owed $38.9 million. And currently, there are two other Square 9 projects in Metro Vancouver that are now in foreclosure proceedings as well. So again, this isn't about blame, though. Developers have been dealing with rising construction costs, labor shortages, higher financing rates, and shifting demand. But situations like this remind us that pre-sale carry real risks. And because those risks often sit below the surface, buyers need proper guidance. This is why representation means so much. When someone buys a pre-sale straight from the sales center, they're dealing with a team that represents the developer. Their job is to sell the project, not to point out red flags, explain legal nuances, or even evaluate whether the purchase makes sense for your long-term plan. So that brought me to what you should reasonably respect from your realtor when you're used as an advocate for you. So, one, clear insight into the developer's history and reputation. Number two, guidance on the contract details that impact your protection. Number three, a calm explanation of disclosure statements and amendments. Number four, context for pricing strategies, especially when they seem aggressive. And number five, balanced advice that looks ahead and not just at today. So before I close out today's segment, I want to give my top 5 pieces of guidance when considering a pre-sale. One, Treat deep discounts as signals, not just savings. Number two, study the developer's past projects. Number three, read and fully understand the disclosure statement. Number four, think in future tense. And number five, never, ever, 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 ever purchase a pre-sale without your own representation. There is no cost to you, and that protection it offers is invaluable. The Belvedere situation isn't meant to create fear. It's meant to reinforce the importance of informed decision making. Pre-sales can be fantastic opportunities when approached with the patience, clarity, and strong support. And that is what I wanted to mention during Insights with Allister. So, Geoff, I never got to ask you about your thoughts on what I sent you last week, but what are your thoughts on that?
Yeah, well, the reality of it is not so long ago, pre-sales were a fantastic opportunity to make money.
Yeah,
And we are now in an environment where, I would hate to be a developer right now. There's tons of inventory that's out there, even with projects that are complete
yeah,
that are still empty, like with these 40 plus units, say with Belvedere. What we don't realize is yes, it's complete, but you still have the creditors wanting their money, right?
100%.
And now you can't even complete on this thing. Like now you have these units and now you're going into the bankruptcy. It's tough. I remember when the development side of things was booming, people are always going to developers. I want to be a developer. I want to be a developer. Man, I don't think there's too many people that want to be developers in today's environment. It's not
No.
fun. And the reality of it is we don't see the stress that these guys have, right?
Yeah.
We see that they have these multi-million dollar projects that are going on. We believe that they're making multi-million dollars, but again, it's that thing. It's the same thing. It's high cost, high expense, and if
Yep.
all of a sudden things turn sideways on you, which they have, and there's really no um, clear pathway to how that's going to rebound here anytime soon. We are starting to see a lot of these developers and reputable developers as well that are going into the bankruptcy and really going into some hardship.
Well, and that's what I want to say, like that's where I said it's not to assign blame because no developer is getting into this in with with the intentions of not being able to pay out their creditors, but that is the market that we're in right now, and that's
Yeah.
why I wanted to, just again to say why it's so important to have representation with you and why you should reasonably expect your realtor to be able to research those developers for you. Now, we won't have, it's not we may not, we really won't have access to their underlying financials, right? That's not anything that's public and we're privy to unless we happen to get some inside type of knowledge. But what we can take a look at is past project history, right? How they were able to complete on time, if they were able to complete on time, reviews or anything else that we've known. There is the ability to get a good gauge on whether or not the developer that you are looking to buy into is going to have that ability to complete,
Yeah.
right? And I think that's one of the things people miss. And that was, when I have to be honest with you, I didn't see that 25 percent off flash day sale back in March. I heard about it, but I didn't really look into it or see it. And that's one of the things that I had thought to myself is that doesn't make sense. You're all of a sudden going 25% cut to your condo. That's crazy. You don't hear about those types of discounts.
What that is doing, and you pointed it out, is it's trying to free up capital to get the wolves away for a period of time, hoping
Yeah.
that something's going to turn around, and which it didn't, right?
One of the things that they had also done is they had negotiated with some of the tradespeople, because even the tradespeople weren't getting paid, that they were negotiating their fees into getting one of the condos and putting off delaying paying them back in certain times and payback schedules and stuff like that. They were
They were
they
getting
were in
creative.
that deep. Yeah.
Yeah, they're trying
Yeah.
to be creative. And
Yeah.
good on them, to be quite honest with you, to try
Yeah.
to figure it out.
Yeah.
But I believe that a lot of these developers with these empty units, I believe they're trying to shift those to a rental capacity now, right? So they can
Yes.
generate some type of monthly income coming out of them. Because the reality of it is, it's just the condo market is dead, right?
Yeah.
So,
And I had a few people reach out to me to ask what the other buildings that were under foreclosure were. And it is one of them is the 1-8 project, which is in Burnaby.
okay.
Yeah, and the this because this the Belvedere was right near King George. So the 1-8 project in Burnaby, and then the other one was a 5-story mixed use building, which would have been 4-story apartment then with retail underneath. And that one was 18742 and 18758 72nd Avenue in
Yeah.
Surrey. So
Yeah. And we won't even talk about the projects that didn't start that were scheduled to start, right?
that's right. Yeah.
They didn't break ground, or if they broke ground, they just left it because there was just the money dried up, or it wasn't making sense on moving forward. So yeah, my heart goes out to these developers because we always think that they're making tons of money, and when times are good, they are making money. But again, when times are bad, we're not talking hundreds of thousands of dollars with these folks. We're talking millions, right? So
Millions. Yeah. Yeah,
tough. My
exactly.
heart goes
So
out for them.
me too. All right, man. Well, what do you got for us?
Yeah, you know what? We're going to talk about credit. We're going to talk about credit, how it affects mortgage approvals. And we quite often say, your credit is your report card to lenders. But I always think it's a nice, gentle reminder to talk about how your credit actually affects when you're borrowing. In fact, I jokingly say it's equally as important as your income. Now, I've also said that just because you have great credit and no income doesn't necessarily mean you're going to go get approved for $1 million mortgage. Likewise, if you're making $1 million and you have poor credit, you're probably not getting approved for that $1 million mortgage either. But they do go hand in hand, and this is where a lot of people do get confused because even today, I received a phone call and, oh, I got declined from my bank, but my credit is really good. And I'm like, well, what do you do for work? Well, I'm a full-time person, retailer. And I'm like, okay, well, great. You have a $60,000 income, you have great income or a great credit, but doesn't necessarily mean that you're able to buy this $800,000 condo or townhouse with 5% down. Well, but I have good credit. Well, credit is just one of those things that's part of that pie when you're getting approved. So
Yeah.
credit scores matter. At the end of the day, your credit is a report card to lenders on how you pay back debt. And when you have strong credit, which is usually 680 and above, you are going to get the sharpest rates, providing that you qualify, right? So it's about your income, it's about your credit, it's about your debt. So again, when you have a credit score of 680 and say your income is where it needs to be, your debt is where it needs to be, you're always going to get the sharpest rates with the lenders that are out there. Now, the same goes when your credit is not where it needs to be. And say, sorry, got the phone call going. And say your credit is not where it needs to be. That's also an opportunity when we start talking about subprime lenders and private lenders. But again, you also need 20% down when we're utilizing those lenders. And again, a lot of the conversations that we have about credit is, well, I have a bad credit score, Alistair. What am I supposed to do to make it better? Right? I'm going to
Yeah.
throw you here. What do we need if you have poor credit? What do you need to do? And not to throw you on the spot, but what do you
No,
need
that's okay.
to do to improve your credit if your credit is not very good?
Well, the biggest one is start to pay your bills on time.
Right? Is your payment
That's
history?
yeah, that's the biggest one. Um,
There's also the utilization of credit. So again,
Right. So that's a yeah. So that's what I was gonna say. You don't like so you want to keep it. I believe you told me before. We had a discussion about this under 30%, is it?
right. So if you have $1,000 limit, you want to have your balance be about $300, right?
Right. Right.
So when we talk about credit utilization in English, that means are you maxed out in your credit cards? Like what
Yeah.
is your limit to what is your balance? And if you're maxed out, it's going to have an impact on your credit score. So the rule of thumb is that if you have $1,000 limit, you want your balance to be no more than $300.
Right.
If you have a $10,000 limit, you don't want your balance to be no more than 3,000,
3,000.
right? So 30% of the limit. And then the other thing that what makes up your score is how long you have had credit for. And what type of credit do you have? Like, is there a mix of a car in there? Is there credit cards in there? Is there unsecured lines of credit? Like, what is that mix of credit? And all three of those things, payment history, what you owe on your debts, and what type of credit you have and how long that you've had it will make up your credit score. Remember, it's that 222 rule.
Yeah. Love
That's
that one. My clients love that one, by the way.
That's what we always say. It's the 222 rule. How
Yeah.
to improve your credit is making sure that you have two forms of credit. You're making payments on time every time for 2 years, and that the limits on these types of credit are no less than $2,000. And then ideally keeping the balance on these trade lines, also known as debt, within 30% of the limit, depending on what we're talking about.
Yeah.
If you can do that, you are going to have a credit score of 680 and above. And it's so funny. I had a friend of mine. He was, and the highest credit score you can get is 900, right? And every other month he would phone me up. He's like, my credit score is this, like 750. Like I need to get it. How do I get it to 900? And I'm like, look, Rob Stump, look, Rob. It doesn't matter. Your credit is at 680 and above. You don't need to worry about it. You don't need it to be at 700. You don't need it to be at 800. You don't need it to be at 900. You're going to get the best discounted rates that are out there. But I heard that, I need to get it up to, 800 or 900. And it's like, this is where I go back to understanding credit. It's not about how high you can get it. Sure, that's a great goal. In fact, I actually just worked with a client that actually had a 900 credit score, right? But it's not necessarily, getting your credit as high as you can. You want it to be 680 and above. And if you're doing that, you're making your payments on time every time. If you're doing that, your balances are within 30% of your limits. If you're doing that, again, the amount of time you've had your credit and the type of credit that you have is all exactly where it needs to be. So again, the best rates are 680 and above. Even if your credit is even at a 650 or a 640, we can still get you the sharpest rates, depending on the storyline behind why your credit is a little bit lower, right?
Yeah.
But if you have a credit score of 620 and below, a lot of times, and I'm not going to say every time, but a lot of times, if your credit is below 620, this is where we have to take a look at alternative financing. And we've talked about that a lot with B lenders or what they call subprime lenders and private lenders. And every time that we have to go to an alternate lender, remember, you have to have a minimum of 20% down, right? So again, people will then say to us, well, why does it even matter? Like why do credit scores even matter? And I go back to your credit score is a report card to the lender on your ability on how to handle debt. And it matters because we are coming into an environment that we're having stricter lending guidelines, right? We are getting higher rates when the file has a higher risk, and we've talked about business for self people. We've talked about stated income. We even talked about amortizations. As far as if you have a higher amortization, you're going to have a higher rate. And then there's a lot of lender scrutiny out there because again, let's use the developers as an example. Huge foreclosures that are happening on the development side of things. Not so much necessarily on the housing side of things, and we talked about this, I think it was last week or the week before, that BC and Ontario, their foreclosure rates went up 160%,
Yeah.
right? And then when you take a look at what it went up from, it went up from 0.22% to 0.44%.
Yeah.
Right? So it's still well below 1%. But again, the news was foreclosures increasing in Ontario and BC. So again, folks, remember what we always say, always make sure that you read more into and look more into what you're saying rather than just hearing that headline and then spouting it off.
Right.
Don't want to do that. And yeah, again, if you have poor credit, there are very many ways that you can improve it. And like I said, that's just paying things on time. That's just keeping things within 30% of their limit. This is again things that every one of us can do. And I'm surprised actually, Alistair, on how much or on how many people actually do not have good credit because it's something that we were never educated in, right?
That's an argument that has been made, at least since I was in school, that that's something that they fail to teach in the school system that should be taught in the school system is financial literacy.
I think
Um,
they're getting better with that now, where they're actually
yeah,
offering courses within financial literacy.
yeah,
I know my kids went to MEI out in Abbotsford, and I was always asked to come and speak. I forget what class they call that. It's like the lifestyle, not the lifestyle class, but one of those home economic classes, but not home
sure.
economic. But and yeah, it was just going in and explaining to these kids, they were in grade 11, I think, the 222 rule. It was explaining to the kids it's okay to get debt. In fact, you need to go and get a credit card. And but again, that doesn't mean you're going to go rack up that credit card. What that means is that you're going to get it and you're going to pay it because that again is going to build you up and establish a report card. So when you do need to get financing, be it a car, be it a home, you have that credit history that's telling the lender, what kind of borrower you're going to be.
Yeah, yeah. So important. So
So
very
important.
important. Yeah.
So again,
Shout
anybody
out.
that's in our audience, if you are having credit issues, reach out. In fact, another file that I worked on, Alistair, this lady believed she had credit issues. She was told that she had credit issues. She was declined because of her credit issues. We took a look at it. Her credit was like at a 670, which again is not bad. And
Right.
basically took her file and we got it approved and we had no issues, right? So
That's crazy.
yeah.
She's probably dealing with a bank. No offense to banks out there. Yeah, it's just that,
She
unless
was
it's
dealing
easy, they don't really like to do it. I'm sorry.
she was dealing with one of the big six banks that declined her,
Sure.
or the discussion was that they were not able to do anything three different times.
Yeah,
We
that's
took a
tough.
look at it. We brought her to a different bank, but again, we got her done. And it's not necessarily the bank, because maybe it's the person that's working in the bank. Maybe it's
Right.
that lending partner that's looking at the file and not really doing what needs to be done to get that to an approval. And again, this wasn't very difficult. In fact, it was very standard. But this lady had so much anxiety even to start working with us because her bank told me that I couldn't get it, or told her that she couldn't get approved because her credit wasn't where it needed to be, which was
That's
totally not the case.
that's crazy. That's crazy. Shout out, by the way, to Canadians. I read an article that the number of homeowners behind on mortgage payments has fallen for the first time in 3 years.
Hmm.
Yeah. So we're getting even better.
Well, and again, I think that percentage,
So
Louis said,
it goes back to
Louis
earlier what you just said. I
Louis
was
is
gonna
saying
laugh about
hello.
that.
But
Yeah,
it goes back to that percentage. Like, yeah, we're improving, but what are we improving from, right? Like
I'll tell
that's
you.
I've always said that Canadians always will pay their mortgage. People that are even going through a bankruptcy will always pay the mortgage. Everything else is going into default, but again, they're keeping their mortgage strong. So
Yeah. So the delinquency rate was 0.22% in the second quarter, down from 0.23% in the first quarter. But hey, we're still getting better, and that's super low, and that's the thing. That is, to your point, we are good at paying back our mortgages. So that number just shows, right, where we are, where we are in our mortgage payment. But hey, way to bring ourselves down even further. Better than the best.
Yep.
Right.
There we are, my man.
Awesome, man. Well, I think that was a good pod, man. We've learned a lot. 2-2-2 rule, right? That you don't have to have a perfect score. Yeah, a perfect score in order to get the best type of rate. We learned to make sure you get representation, right? When you're looking at buying a pre-sale, to make sure that you have that representation for you. Right. We learned that
could be coming down.
Cost of goods coming down. That's a lot of good stuff that we got on the way right in time for Christmas, baby.
It's spreading the joy.
That's right. We're spreading the joy. That's amazing. Well, everybody, thanks again so much for taking the time to listen to us. Join us again next week for episode number 80. Man, I can't believe how much higher we're climbing in our episode list. Thank you so much again, Sonia Madsen Mills, for joining us last week. I had a few people reach out to me that loved that episode. So again, just want to shout out and thank her for joining us again last week. So for everybody out there, have an amazing weekend. Get out there and have some fun. I don't know if it's supposed to keep raining like this. It's pretty cloudy and wet. But anyways, go out there, do something, get your Christmas started. Go out and buy some presents. Get your picture taken with Santa Claus. Go out and have some fun with some friends. Visit some people you haven't talked to or haven't sat down and broke bread with for a while. But most importantly, in the meantime, stay empowered, stay informed, and Geoff,
stay in tune.
Stay tuned. That's right. I almost messed that up. All right, baby. Peace out.